Welcome back to the channel. My name's Cody. Today I am joined by Mr. LLC, who's going to give an intro of who he is, the business that he's built. Now, Arek is in the space in real estate, but he's built quite the syndication business. And he'll correct me if I'm wrong, but I believe he's buying his own deals too with just a couple buddies outside of that syndication. So super stoked to have you. If you can give a little intro, Mr. LLC, tell us who you are.
Yes, Arek Boynerian. From Syria originally. My family moved to America 20 years ago. Grew up in like middle class, lower class. We never really had much money, and money was always a problem. So I've always been extremely hungry as an individual to do well and help my family. Started out with a snow business in high school. Later, when I got into college, that helped me fund my first house. Funny thing is, when I came time to buy the house, the money was gone. So I had to borrow it from all my friends. It was a single family house. It was like 500,000 and I needed 25 grand, 5% down to buy it. Um, Bought the house freshman year because I didn't want to pay rent and didn't know anything about real estate, didn't know what I was doing. Just knew that I didn't want to pay rent. A couple years went by and I'm like, this real estate thing is the best thing ever. 2 years later, I started buying apartments, and now I own 438 apartments and trying to get to 1,000, hopefully by next year.
And you've been buying, what's the time period again? So you've been buying.
Um, I bought the first house 4 years ago, but I started buying apartments in 2022. My first one was in January 2022.
So how does one go from first apartment deal two and a half years ago to now 438 apartments? Let's talk about your business. What's the model?
I think it's just the simple fact that we buy apartments. I buy apartments. It's just not even if someone's buying houses and someone's buying apartments, it's like someone's driving a Ferrari and someone's, riding a turtle. Um, some people do really, really well with the houses and it's an incredible business, sure. It's just not my game. There's multiple ways to skin a cat. There's lots of ways to make money. I think the reason I've been able to go so quickly, people see like you going so fast. I don't really think I'm going fast. I bought like 8 deals last year. That's not a lot. It's like buying 8 houses. It would have been just as hard to buy 8 houses as buying these 8 apartment complexes. Would have taken the same amount of time, but I bought buildings. So I just bought more units. So year one, in 2022, I bought 120 apartments. Year two, 2023, I bought 240 apartments, and I sold 30 in the beginning of the year. And this year I bought about 100 already, and I'm under contract for another 150. Hopefully I close those. But the answer to the question is pretty much just buying bigger deals.
So you're buying the scale built into your business. It gets you more revenue, which allows you to make a couple more mistakes along the way, which I do agree with. I do like going bigger. You are a little over twice the size of my portfolio as far as unit count goes. How do you create sustainability in that? Because there's going to be people that say, well, he came up in an up market. Yeah, we're having a little down market right now. But how do you make sure that your business is actually sustainable and doesn't tank? Because some people are looking from the outside saying, well, yeah, ride a turtle. It's probably easier to hop on a turtle than it is to just go get a Ferrari, right? I can go find a turtle somewhere at PetSmart. I can't just go get in it
Yeah.
and drive it off.
Well, anybody can fail. You know, these big banks just are failing right now. So like no one's too good to fail. Anybody can fail anytime. I just pray to God I don't. I'm believe he protects me and he's with me every day. But I honestly think it helps you. The more you buy, you got more income coming in. You got more renovation money on some deals. Like let's say one deal needs money. Okay, I got some leftover money on this project. Bring it over here. Like I've done that several times. Um, I think keep buying helps you. Honestly, if I stopped buying in my first year when I bought 120 apartments, I probably would have failed because those deals weren't as good as the deals I bought in 2023. And those weren't as good as the deals I'm buying in 2024. And they just like every deal I buy, I'm getting stronger. I'm not getting weaker. And honestly, like if I bought one house freshman year, I was so lucky. I didn't have any expenses really, like no big capex expenses. Like if the roof would have like needed to be replaced or HVAC would have been needed to replace, I wouldn't have had the money. I got lucky that there was like no major renovations. But now, like if something goes wrong, I have the money. At least I hope I will. Like I got some cash reserves, and I have like the bandwidth to pay for stuff. I think the bigger you get, like it honestly helps you and strengthens you. I think there's a book. I haven't read it yet, but I heard it's like 0 to 1. Have you heard about it?
0 to 1. No, I haven't.
It's the idea that like it's really hard to go from 0 to 1, but like going from 1 to 2, it's the same idea like becoming a millionaire. The second million's easy. So it's
Way
like as
easy.
you get bigger, I think it's honestly safer.
So getting to that first million though, it's definitely, and I'll agree with you on this. It's a lot easier to get to the first million if you're buying 100 units than it is if you are buying a house, right? I mean, it's
Yeah.
hard to make $1 million on a house. You could, but it's hard to start there. Your $500,000 house would have to go to 1.5 million, and that's not repeatable for a lot of people. To get there though, what were you analyzing when you were looking at those first deals? You said they weren't as good as some of the deals you've been buying lately, but were you looking at, oh, I'm just going to go get a big score and get this to go up in value by pushing the rents? Is it just
I
cash flow?
know I know way more than I did then. I don't even know, honestly, like we just I wasn't even that like I'm no genius. But I was just comparing deals to deals. Like I was looking at so many deals and I was looking at the 6 unit. Like my first apartment deal was 30 units. And I was like looking at 6 units, 8 units, 4 units, 12 units. And this 30 unit came up. I'm like, the numbers are better. There's more units in one location. I could just buy this instead of buying a bunch of little ones. And the numbers were even better. Like I would just compare deals to deals. And that's why I tell a lot of people when they ask me, like, how do you know a deal is a good deal? You just got to look at a bunch of deals and you'll start to understand like the trends and you start to understand like your buy box. Like I have a specific buy box now. I didn't have one then, but I paid between 50 to $60,000 per apartment now. And I try to stay there and I buy in the same location. But when I first started out, I didn't even know what I was doing. But I did know like that deal was better than all these other deals. I did know that real estate's amazing. I did know that it made money. I did the cash flow runs and seeing all that, but I know nothing compared to what I know today. And that's kind of like a bigger summary. But yeah,
And and I think that's fair to say. That's how everybody builds their business. They don't know what they don't know, and
yeah,
then they scale out of their stupidity over time. I know I did that. Jumped into deals not knowing most things about how
yeah.
to operate property, and you live and you learn. You mentioned a buy box. You've got 50 to 60,000 a door. Is
That's a sweet spot.
that's a great price point, right, for apartments? Are you agnostic to location? Like, what are you looking at? It's just a specific market, or are you in different states?
I just no. We bought in Houston. It wasn't. We thought it was going to be a home run. It's not a bad deal. We paid no money for it. We got paid $136,000 at closing to buy a 40 unit apartment complex. So it's definitely a score, but it's not as good. I'm already realizing it's not as good as a market as my market in Little Rock. I pretty much just buy in Little Rock and like in surrounding towns. So it's like Central Arkansas. So I just
Okay.
buy there. I only want to buy there. I have like one house in Phoenix because I used to go to college in Arizona, but I just want to buy in Little Rock. The market is just so good compared to other markets. I tried buying in Dallas. I spent time in Dallas. The deals are not as good. So I just stick to Central Arkansas, Little Rock primarily.
So what I'm grasping for your business model right now is you like the scale of the actual units, but you also like taking over specific markets.
Yeah,
You
all my
don't
properties are within like 20 minutes of each other. Some of them are like 5 minutes, 2 minutes,
have you,
maximum 30 minutes away.
how many people are in that general area? Is that a I haven't been. Is that a bigger area? Little
It's like
Rock?
500,000. No, it ain't.
Okay.
It's not a big city.
But you're probably not at the point yet where your apartments are directly competing with each other and you're starting to pull tenants away. You're not that small of a market.
No, no. Uh-uh.
Okay. Do you think that's going to be
There's lots of apartments in Little Rock. I think did the math one time. I think there's like dude, there's like I don't know, 50 to 100,000 apartments in Little Rock.
that's huge?
Yeah.
So you're shooting for 1,000. Is that timeline set in stone? Are you going to be there this year? Is that a next year thing?
No, I was getting discouraged. Now I'm kind of getting ramped up. I was like, I was moving slow in the beginning of the year, real slow. And I was like, this ain't gonna even happen. I was like discouraging myself, but now like I really want to push for it. I might not get there by the end of the year, but I'm gonna get there. I also don't want to rush it. I don't want that number to be like an ego thing. I want to get there safely, and it's not really about the number. I just want to keep growing. That's the idea. Everyone, I talk to so many people, and people just don't have the same like motivation as me. They're just so complacent in life. Like they get some money and then they're good. Like I have like much bigger dreams and like aspirations, and I believe like happiness is progress. You constantly have to be like bettering yourself and working on yourself. Um, so no, it's deadline definitely by next year. It's gonna happen in 2025.
Having gotten to the 430 that you've got, you're going to keep pushing to 1,000. You're going to surpass it. I'm confident because I've been watching you since we first connected. It's been fun to watch you grow and post your videos. What's the biggest setback that you've had? It could be financial, could be something that just didn't play out the way you wanted, whether it was a deal, whether it was a partner, a structure.
I don't know about a setback, but I've had like deals that like weren't as good as other deals, and I've learned from them. I bought a 24 unit, and it was a like, dude, I kicked every tenant out. This was like my second deal. I bought in early 2022. I kicked every tenant out to remodel the complex. Like, we're an idiot. Like, you do them at a time, right? Like, you do them one by one or five at a time or something. And my smart uh self, I kicked everybody out. It was so stupid. I don't even know what I was thinking. Oh yeah, I was trying to condo them and then sell them as condos. Like, and then I halfway through this renovation deal, I was like, I'll make just as much money renting these bad boys out, and it'll be worth just as much. Yeah, it was
Think
just so it was terrible. I spent way too much money. I spent 700 grand on this 24 unit combo. That's 30,000 a door. That's like ridiculous. There's just no need for it. And then rents went up, and Section 8 was paying the same amount of rent as these luxury units I was trying to push. It's honestly hilarious. Like Section 8 pays 1,100 for a two bed. I was renting these for 1,100. But when I started the project, Section 8 rents were 800 for two beds, and then they went up to 1,100. And I was like, what did I just wasted all this money. Um, but that was, and so I was losing money the whole time. I was at like a 5,000, 6,000 mortgage payment for like a year. I was losing that money. I honestly don't even know how I made it through. I had $6,000 mortgage payment for like a year plus. I wasn't cash flowing more, dude. Honestly, 18 months I didn't make any money. Other complexes were paying for it. That's why I kept buying deals, and that was like strengthening me. It was honestly a blessing I kept buying because I needed the cash flow to pay for like this property I didn't make money. Another mistake I made is I bought this 28 unit mobile home park and I turned it into 50 units. I haven't even finished it. I bought this park in April 2022. Okay. And it took till November 2022 to get all the approvals. And now we're in June 2024 and I'm still not done. Like, it's honestly such a joke. Um, I'm just not a builder. You learn from these things. I'm not a builder. I don't do this anymore. I love mobile home parks. They're my favorite asset class, but I'm not a builder. So I kicked all the tenants out again at the 28 mobile home park because like we had to because we were like redoing all the sewer and water lines and electricity. That was like these two were big setbacks, and that's a $3,000 mortgage payment that doesn't have any cash flow. So
that's fun. Gotta love not having
yeah.
revenue and having expenses.
Yeah, that's why I only buy stuff now that like tenant occupy, don't kick anybody out, get them to stay. Like that's what you need to buy. Like get all the risk off the table. You know, don't build nothing, light remodels, if any. Like
Well, I feel like most investors learn that lesson at some point. I'm glad that you learned it early. I learned it on my first partnership deal, which was a 38 unit. I had been buying stuff without my partner, Christian, at that time. But our first deal, we did something similar. We were spending 28 grand a unit renovating. Some of them were 31. Over improving an asset and killing your revenue is not a
you're
good
just
way.
so excited. I was just like, you're just so excited. Like, oh, you're like, I loved it. I'm like, oh, put a new roof on it. Like get new windows, granite countertops, stainless steel appliances, everything new.
Doesn't pay for itself very quickly.
No, you don't even get much more. You don't even get more rent. It doesn't even make any sense.
Yeah. Well, it sounds like you had that pride of ownership mindset, because you were over improving.
Yeah,
I did too. Do you still take pride and ownership of your assets, or are you
absolutely.
okay? Let's
I,
talk
I,
about
I
that.
walk I, wa- I walk away from deals. I walked away from a 34 unit I had under contract like last month or 2 months ago because when I went through the inspection, it was just terrible. Property was just ugly. It wasn't built right. It was in a bad part of town. Yeah, it needs to look good. It's got to be like nice real estate. Like I'm not buying just anything. Like some people like I don't know if you guys people can see that, but like when I go to a property, like it's got to look nice. Like you got to want to live there. Like I'll live at any one of my properties besides my mobile homes. Honest to God.
Would you be that selective when you were getting started, or would you buy whatever you could if you had to start
I
over?
just didn't know. I was just getting lucky, I think. Because I bought some nice buildings when I first got started. Um, I kind of had a feeling like with some of the units that I passed away from, but now I like know a lot more. It's crazy how much more we know now than when we started. I would honestly go as far as like I don't even want to say that. But like I just like really know what I'm walking into when I like at least I think I know what like I feel like I know what I'm walking into when I walk into apartments.
And are you buying all these with conventional bank financing, or how are you
Yeah,
picking?
local bank debt, and I'll have the seller carry my down payment. Is like my favorite way to buy it. If the seller won't do that, I'll have to raise the money with a partner, which I don't like doing that.
Okay. How many?
I have like 5 deals with partners. The remaining 16, it's myself. I own like 70% of the portfolio on my own.
That's huge. Yeah, that's really big. And you've done that all with local banks. The banks are fronting 80%, or what's that look like?
Yeah, they used to do 85 back in 2022. Now they do 80. Some do 75, which I don't go to them. Banks are getting tighter this year. A lot tighter. But some of them still want to play the game. But yeah, they'll
And
do 80%.
and those sellers that are financing their the down payment for you, is that just a standard second position loan, or are you putting that against other assets, or what are you doing?
Second position loan, usually interest only for 3 to 5 years. Low interest rates like 3 to 4, sometimes 5. I think I have one at 5.
That's huge. Yeah.
Yeah, not bad.
Are you still getting those? Are you still able to get that today? Or are they saying no, you need
Yeah, absolutely. Definitely.
is that just a small town thing? Because I've heard a lot of folks say that banks do want your own money. They don't want a second.
Yeah, yeah, no. Oh, yeah. I get a lot of pushback. It's just being resilient and tenacious and never giving up and going to the next bank. I got like 2 banks that will do it right now. I'm trying to find this third one. Um, what do you call it? I have this other one, but they saw my tax returns and I don't make money because like last year and the year before, I'm putting so much money in my properties. On paper, like on my tax returns, I don't make any money. Do you have that problem?
No, because the only reason I wouldn't make money is from the depreciation, because the property is
Yeah,
cash flow. So the depreciation gets added back on my returns.
yeah, yeah.
Big-
They add that back on what do you call it though? I did like a $500,000 remodel last year, and another $300,000 remodel.
Mhm.
So like you can like, and but that was like money from the bank, and we buy it for a low price so we can renovate like that. So don't have any. On paper, it looks like I'm losing money, but I'm not losing
Those,
money.
those remodels shouldn't be expensed. I mean that I believe you can depreciate the capital expenditures over
But I don't
time.
wanna. I don't wanna. I don't wanna capex that. I want to write it off. And like anything over, it's like anything over 5,000. Yeah, you have to capex it. But anything under 5 grand, you can do it at operating expense.
Mhm. Yeah, however you want to run that business, but the way that I've done mine, because you brought it up, I allocate that stuff to capital expenditures when it's the CapEx, because I'm doing similar to you, apartment buildings, and $10,000 is a drop in the bucket, right? When it comes to renovating
Yeah.
them. And so I keep the actual income on the P&L up enough to make sure that I've got those banking relationships. But I've yet to do a deal where the bank fronts 80% and they allow a seller second. So that's pretty interesting.
Yeah, it's my favorite way to buy it.
And in your current position, did you do 10-year debts? Did you do five? How did you
They
build
they
stuff?
they they do five. They won't do 10.
So you've still got another few years then on your deals. What's your
Hmm.
plan to that? Did you do enough value add where you've got that equity position, or are you going to sell
Oh
some, pay
yeah.
down?
I'll just refinance with Fannie Mae debt hopefully next year with like 10-year fixed loans.
Cool.
Yeah, that's the plan. Hopefully rates come down a little bit. If not, whatever, I'll wait till the following year. But I make these deals work with 8% interest. So when they come down to 6 or something, I'll be jumping for joy.
Yeah, you're going to be in a great place if they go down to six. 2 point
Oh
drop on
yeah.
4 units is not a bad place to be.
Yeah, almost all my deals are 8% interest. 8.5.
Wow. Well, yeah. Do you have anything else you'd like to share on your actual business, how you're running it? It's cool. I didn't know that 70% of your deals were just you. That's strong.
Yeah, I don't like I love my partners. They're great people. I just don't like the idea of having a partner. Like one day I just want to be my wife and I with the real estate portfolio, like over dinner, having a good time, like I ain't calling nobody. All those phone calls are like an hour long. They're terrible. I just want to like have fun in life.
Do you have a plan to buy them out, or are you just going to keep riding those
No,
deals with?
I'm not even worried about it. It's not even like just don't care. We'll either sell them or buy them out in the future. But I'm just focused on buying more.
Well, that's huge.
Yeah,
Congratulations.
let's go.
And Mr. LLC, what's the reason behind that branding? Gotta
My
ask.
friend said it. My friend said it in college, in some video or something, and it started to stick, and everyone started to say it, and it just Arek real estate was just too long.
Well, I think that does stick, and I haven't seen anybody else coin that. So that's
Yeah.
branding. What's
Oh
what's
yeah.
the final question for you today? What's next? You're gonna go to the 1,000 units, but if everything went perfect in your business,
Hmm.
what do you want to do next?
You keep going. I do want to start a bank one day. That's like down the line. I know a guy that's trying to buy one. I'm trying to get up some cash so I can get involved in the transaction. Um, that'd be really cool. And then I want to have my own insurance company. Insurance companies are just such scams. I heard you need like 2,000 units to have your own. So once I get there, hopefully I'll have my own.
Cool. Yeah, self-insure.
Yeah.
That'd be huge.
Yeah. Yeah. Huge. They're terrible insurance companies, just terrible.
Well, where should folks follow you to see your journey as you push through buying a bank, creating your insurance company to self-insure? Where should people go?
Just my Instagram, TikTok, Facebook, Arek Real Estate, on all of them.
Sweet. All right. You heard it
I
here.
got some. I got questions for you, Cody.
Okay, let's jump into it.
What's your daily routine?
Well, I try to work out once a day, and I don't do every day. So, if I'm lifting weights, that's going to be probably 3 times a week. I try and get cardio in 3 times a week on spin bike, and then it comes down to managing the overall assets. I'm not the property manager, but I have to oversee the money, so I check the bank accounts every single day.
Yeah,
I
I
got
check them every day.
Let's see what's coming in, what's going out. I check my Appfolio
Yeah,
reports, my delinquency
that's
report.
what that's what I use too. Appleio.
It's been very helpful, but I like
Oh
watching
yeah.
what's going on in the portfolio on a day to day. where delinquencies are at, when move-ins are scheduled, when move-outs are scheduled, because I have to manage the cash flows of the portfolio. And I'm the main person in my org that manages the bank relationships, so the refinances, the loan payoffs. I'm chatting with attorneys on different structures on a day to day. So we're spending lots of money on legal to figure stuff out. Lots to learn in
I
this
hate
business.
lawyers. I
I don't.
actually love my lawyer part. I haven't done really anything with them yet. I don't want to.
Yeah, I've spent a ludicrous amount of money and many, many
For
hours.
what?
There's a lot to learn about the real estate game that most people don't take the time to learn, and so I've been asking the questions that people don't, and some of them are regarding around debt structures, equity structures. And some of them have been around structures around asset protection with trusts, asset vesting,
Yeah,
and
I'm gonna get my trust soon. We're having it drafted now.
nice.
Yeah,
So that's been the bulk of it, but I've spent probably more than 100 hours just chatting with them,
yeah,
and I found it to be worth it because ambiguity's been the one thing that seems to tank people. They operate too much in gray space and they don't truly know what they're doing. They haven't asked the questions or paid to get the answers. And so I've been spending a lot of cash flow and a lot of money getting the answers so that I don't have as much gray space in my universe. There's always going to be some, as you know, but
yeah,
I spent a lot of time researching that because I want to know what will happen if I do X. Because I've made
yeah,
mistakes, consequences of doing stuff. And
yeah,
you have to learn. And so you make the mistake and then you get educated, you don't do it again. So I've spent a lot of time doing that. I've been buying out partners this year. I bought out partners out of probably 40 or 50 units. I'm continuing to buy stuff on my own, continuing to buy stuff in the partnerships, flipping some deals right now. So flipping an RV park, flipping an apartment building, flipping a motel. And
Oh,
so,
we should. I want you to show me. I don't know much about RV parks. I know everything about a mobile home park, but I'm gonna bring you a deal and we can analyze it together. Maybe and you tell me like what you see in it because I don't know much about them. I've only heard negatives about RV parks. Like you got to pay for electricity. They can come and go at any time. Like you have to have an on-site person. Like all this. It just sounds terrible.
well, there's some apartment buildings that are the same exact way, and your ability to manage what you got in front of you determines the outcome, right? So some apartment buildings are on one master meter. So you have to pay the electricity. You got to have an on-site person if you're a certain size, right? There's systems and efficiencies as you grow, but yeah, if you buy a small RV park, you're going to have a lot of issues. Same could be said with a small apartment building.
I think it's a 60 unit.
Okay.
We
Yeah.
should review it together. I'd love to see what you think about it.
Yeah, we can absolutely do that. But yeah, and I'm still looking at buying deals. That's you make money when you buy real estate and you manage it better than other people. And so
Absolutely.
I'm focused on how do I get better at overseeing the productivity of the assets because I would rather effectively manage what I've got better than pursue buying another 30 units. I know I can make money on the 30, but if I can effectively manage this, I can transition what I've got into something huge. Because very few people can manage the 10 to 60 unit apartment complex size really well. So if you
They
can
just
and you
don't
can,
know. They're just like there's a lot of inefficiencies with a lot of owners I see. I probably have some too, but I see some I like completely turn on a complex when I buy it. What's your average rent?
right now we're around 1,000.
Okay,
I've got
and
some that are, I've had rents above 2,000. I've had $700 rents. I bought a property with rents that were 380. That property is now going for 965, which spent on it, but
it's awesome.
you get the idea, right? Then that was the 38 plex. So we had some sizable revenue increases on that building. But
Yeah,
rent right now is right around $1,000, and I plan to keep it there for the next 2 years. I don't plan to rock the boat while
yeah.
I'm systems in place.
What's your average cost per door? Like, what do you usually pay for them?
When I'm picking stuff up, well, right now, I'm likely paying around 90,000 to 150,000, depending on the asset. There's one
What?
set,
And you're getting $1,000 in rent?
well, it depends. The 150, I'm getting like $1,500. But
Yeah, that makes sense.
I'm looking at paying
Wow.
230 a door on a 27 unit,
What?
and those rents are
What?
1,800. But here's the piece to it.
Why?
10% down, seller financed,
Hmm.
non-recourse debt, and there's margin between the cost of capital and the cap rate. So I'm making positive spread. And so I've
Does
stopped
it does,
looking.
does it cash flow?
Oh yeah, because the big thing, if you want to make your real estate cash flow or any business cash flow, you need your dividends to be higher than your cost of capital. So my cost of capital is less than the cap rate. It's called a factor rate in real estate. So I'm making positive margin on every dollar I borrow. So I make on that deal, I'll make about 1% on every dollar I borrow. And I'm going to be borrowing a large sum of money. I mean, if we do 230 a door, I believe that's the final price, 27 units, it's a $6.2 million purchase. It's going to be a loan of five, basically $5.6 million. So I'll make 1 point on the debt, which is $56,000 of cash flow on the debt alone.
What's the interest rate on the debt?
Six.
Okay.
So you can still come in and get solid deals, regardless of your basis. If the debt allows you to pick up those deals, and those are going to be arguably significantly better pieces of real estate that I could justify holding for a long period of time than when I'm going and picking up the $90,000 units, the $150,000 units. I've found it's never about the price. It's
The
about
terms.
well, more so than the terms, it's about what's the opportunity and do you want to own that? Because if that's a sick location, can't be
So hold
replaced.
hold on, hold on, hold on. The debt on that deal is like $36,000 a month.
Uh, 5.6 million. Let's see.
What's the amortization? 25 years?
IO.
It's IO the whole time?
So that's gonna be $28,000 a month.
20, and your rent fully occupied is 48.
1,800, 27 units. Yeah, 48 and a half. Brand new construction.
Brand new construction. Okay, I didn't know that. Yeah, if you
So
use like a 30% expense load, you're probably cash flow like 5 grand a month.
yeah, it depends on your market, right? Because I've got
Yeah,
cheapest electricity in the country, which is
really.
nice. There's some efficiencies in the management, so we can keep costs on something brand new actually closer to 25%.
Hmm.
But
That's great.
yeah, that not everybody's going to get that efficiency though. That's why you don't start
And
there.
then the higher rent you have, the lower your expense load. That's something I realized. Like with our rents at like $1,000 a month, the expense load's higher than someone with like $3,000 rent. You know, because the cost of hot water here is the cost of a hot water here. Like flowing that unit is flowing that unit. Refrigerator is a refrigerator. Like we lose like out on the slow rent thing.
Oh,
Kind of.
yeah. I mean, there's going to be a base cost for everything, right? So it is nice to upgrade,
Yeah.
but um, not everybody wants to do that. Eventually, I want to push to the primo locations because some of those rents at
Yeah.
that are 2,000, some of them are 2,050, but be conservative, right? You round down to
Yeah.
18 because that's the base there. I have a lot of reason to believe based on the comps in that market, those rents will go to 22, $2,300 in
Hmm.
the next few years. But I can get in now at a basis that works with a debt product that works, that allows me to cash flow. And I like control, which is part of my business. Like, how can I control the pieces on the board? I shouldn't be able to control a $6 million asset with 600 grand, right? I mean, that's pretty cool with non-recourse debt that has positive cash
Yeah.
flow. Tough to do. and it's in a great location. So
Yeah.
that's one of the pieces that I'm looking at as I'm growing the portfolio on the day to day and figuring out the systems, keep costs down. How can I get control of these bigger assets so that one day, like someone will want to buy that over buying my 38 plex at 100,000 a door, right? There's gonna be more
Yeah.
deal.
What's your team look like?
Right now, I built a PM company with my buddy Christian. I sold it to him. So he runs the staff, the day to day. He oversees the hospitality portion of our business. And so we've got hospitality because we got a waterfront resort on the Hood Canal. We've got we've had a couple motels. We flipped one already. We're flipping another. We've got our RV park. So he manages the people. I manage the money. And the biggest mistake I made in my first business venture was I didn't get to manage the money. And someone took advantage of that. So I built the systems with him to manage the people and offloaded it to him. I manage the money, those relationships, it's a good portion of the investors, and make sure all the bills get paid and the money comes in to cover those bills, and then the future acquisitions. So the actual real estate side is mainly me, but the management side and the people side is my buddy.
And how does he manage? You guys manage other people too, or just your own properties?
He manages for other people. We weren't doing a ton of that,
Really?
partnered on that venture, but because TM is a losing business. I mean, you get control of a lot of information, and information is valuable.
Yeah.
But the low margin business with a lot of headaches, and I don't like low margin, and I don't like headaches.
Wow. And so like you guys own everything together, or he owns? Or,
So I had my own stuff before we met. So I had 30 apartments before Christian and I partnered, and we've bought some stuff together since then. A lot of stuff together. I bought him out of some of those properties since, and he's bought some stuff without me. He owns in Dallas and he owns in Houston and some other market in Texas. I don't know all the stuff he owns, but I've also got some stuff here in. I'm doing some flips in Tennessee, and I got a couple rentals in Indiana just because my buddy wanted to buy. So we decided to buy there, so we bought some stuff there. But small property. I mean, it's drop in the bucket. It'll scale up eventually, but
yeah.
like play money, right? You just buy it because it's kind of fun.
Yeah. Why'd you buy in Tennessee?
So I live in Tennessee right now, and I actually just bought a flip just because cash in is nice, and it was zero down. Got a loan on it for 120,000, bought it for 45,000 in a neighborhood that sells around two. So it's just a got cash in.
Wow.
It it might be. I mean, it might be a distraction. I don't think it is because it'll be fun. And I did it with a buddy and like a friend couple. My girlfriend and I all bought it together, and it was zero down. And it's fully funded. We got private money, no payments for 6 months. And so we're going to go and flip it, make some cash, and then we're all going to scale up and buy the next one, buy the next one, and so that'll keep growing. It's going to be a lot of fun.
Yeah. So the PM company, how many apartments does that manage?
It's a few hundred, and some of that's brand new complexes. Some of it's really old stuff. Some of it's managing some of the value add projects that we're buying. Some of them are the value add projects that our buddies are buying. But those range anywhere from I think they manage some duplexes, not a ton, and then they manage the 12s, the 10s, the 30 plexes, the 38s. There's some 14s in there. They're the small to small mid-sized multis.
Like my team, we got four four guys, and
Mhm.
then manage all the apartments. Each manager manages about 100 units, 150 units.
Okay.
What does that man? How does that management team manage all the units? Do they break it up per unit, departmentized? Like one person does collections, one person does leasing.
Well,
How is it set up?
similar to you, that they manage in one specific location. They're not spread out. They're limited to one county because that's where we build our portfolio and it's the most efficient there. They have a
Yeah.
head, they have a head person that oversees the leasing and the money in. And right now they're hiring someone to assist with that individual. Maintenance requests come in online through Folio, which is a service that you use as well. And they've been able to really effectively manage their workload by keeping things in the cloud.
Like, is there like one manager per 100, per 50, or like it's might be departmentized? Like, it sounds like one person does leasing.
Yeah, so they've got a head person right now for, I think there's probably 300 units. And they've found through the systems that we started building, but they've really honed it in and got a rock star person who's managed resorts, managed RVs, managed mobile homes, and managed apartments. They've got a really good person, and they found that one person can manage a few hundred rentals really effectively if they have all the systems so that not all the maintenance requests are going to them. Their job is keep the income coming in, manage the housing authority. So if we have delinquencies, we can get those people paid for. And if there's a tenant complaint, that's going to go to some other person. They're going to handle the maintenance. But it's a team of three right now.
Nice. That's awesome. That makes sense. One per 100.
Yeah, and there's different components, but each person handles one function of the business for those apartments. So they handle all the apartments, but for that one function, they're not delegating to
Yeah.
the 100 apartments. You get this 100 apartments. But they've done a really good job of systematizing it, and the portfolio is
Yeah.
performing better than it ever has because of that.
That's great. Yeah, management's everything. It's so important. I tried doing third party, it just doesn't work. Expenses are high, leasing's low. I don't like it. I really like my team. I really want to grow my team in-house. I really enjoy it. The guys are great. It's like a culture. Um, I used to hate management. Now I'm like enjoying it. And I believe it's like super important. So I just like forcing myself to like love it.
Will you
Um,
ever pay off your rentals?
yeah, definitely. All
Cool.
paid off, just chilling. That's the biggest problem with real estate investors is the debt eats them up. So if you pay them off, like you're really just like so conservative. You're like really safe.
Yeah,
But that's like down the line.
glad to hear you're doing that because a lot of
No,
younger,
I'm not doing that today.
well, yeah, but a
One
lot of
day.
younger people scale to infinity and they
Yeah.
forget what. So that's really cool.
Well, even Ken McElroy, I'm pretty sure he owns like a few billion in real estate. He still has a bunch of debt. Like he might own like 2 billion, but he has 1 billion in debt or something like that.
Sounds right.
Or you know what I mean? Something like that. So what's your goal for what's your like goal for the year?
For this year, so I got to pay off an investor. We got to do a buyout, and it's about $1 million that I got to come up with net of taxes. So I'm doing some flips. Flipping an RV park, bought it for 373, cost basis around 550, and gonna shoot to sell it for 1.2. Bought a motel for 1.6, cost basis 1.9. This was a slimmer margin deal, but we're gonna try and sell it for 2.5, 2.6. The reason we bought it, it's right next to some of our other property, and it was a slum. So we just tried to pencil it where we'd make some money, and it would fix that location because we bring that location up, our other stuff does better. And
Yeah,
we're actually seeing that all the neighbors are beyond stoked. I mean, we've got it's more of a commercial area. So that was the last one to go, and nobody was fixing it. So we came in and fixed it.
that's awesome.
But we're going in and fixing stuff up so that we can come with $1 million net of taxes and pay off the investor. We could probably just burr and pull the money out and keep the assets, but oh, there goes that. But I don't want to. I just don't want to. pull all that. We could, but I'm looking at buying new stuff and bigger stuff. So right now I'm looking at buying those deals. They might settle out a little less than 230. We're still chatting. That was our last
Yeah.
discussion. It was like 227. But probably buy some of those in that market because I like that market. And then look into buying into other areas like Tennessee because I'm familiar with Tennessee, haven't lived here for a while. I could buy newer last 10-year complexes in the 50 to 80 range as far as units go for like 140 to 160 a door. And all day long, I'll buy that up because
Yeah.
that's where I see myself scaling to. It's a landlord friendly area compared to where I own. And 11031 out of Washington, and I can buy a ton of apartments here. So, and like newer
Yeah.
apartments. I'm prioritizing getting rid of obligations that I've got this year. And next year, it's going to be how do I take what I've got and build that personal portfolio up to 150, 200 units on my own and like built in this century.
Yeah. I bought the 56 unit in March. It was built in 2000. Paid like 55, 56 a door for it. Rents are like $1,000 a month. Um, got another one, bought it in November. It was built in 2008. Paid 68 a door. Rents are like 1100. Um, but yeah, like everyone talks about that newer stuff. Most of my stuff's like 1970s. And I'm just like, dude, that's not even that old. Like in Boston, it was like built in like 1800, 19, like early 1900. So I'm like, late 90s isn't bad. Like not really too worried about it. Like, how old are you talking about?
So I've got a lot of properties that were 50s and 60s. So my stuff's older than
Oh,
yeah. But I'm
yeah,
going
but some
in. I'm
people tell me some people tell me my stuff's old. I'm like, it's just not old. I'm like, I don't know what you're talking about. I'm like, you should see Boston.
there's one. I mean, it's true. There's something to be said about, just owning more stuff that's older. It's easier to buy them. But I've found through my banking relationships, they do care about what's the age of your SREO.
Yeah,
There's weight on that. That they're willing to get more creative with you and work with you if you've got newer, bigger properties on your scheduled real estate. So that's
yeah,
one reason I'm looking at, got to take care of your obligations first. Got to come up with the money, pay off that investor. After that, I get to just focus on growing out of the grind to figure that out. And when that's done, I'm just going to keep building up that portfolio, buy newer and newer assets, get to, get the average unit size up from right now. My average in the portfolio is probably 12 units. And I've got some bigger than that, got some a little smaller than that, got some tens, but get that average up to 30 because I've got 18 properties right now. And I'd really like to have that around 8 to 10, but just have that unit size start to increase.
yeah, yeah. I like them bigger too. I think I have like 12 complexes, 13 complexes.
Yeah,
Um, yeah, it's the same amount of work.
it
What's
is.
your what's your 10-year plan?
I don't know 10 years because 10 years ago I was 14 and I was first year in high school. So I'm not that
Yeah,
far. I'm not that forward of a thinker because the amount of stuff that can happen between now and then, my projections will never be right. I'll either be way off in the right direction
definitely.
or you just don't know. So I like to focus on what can I control in the 1 to 3 year buckets. And so realistically in 3 years, I'll have my investor paid off $1 million that we used to buy the Robinhood. Well, that's the resort we've got. I'll have well north of 200 units on my own and schedule real estate. I'm not going to venture into other assets. I'm not doing any speculative stuff like cryptos, or I'm not doing stock trading, but
Yeah,
have net 8 figure net worth on the balance sheet. Like not paper net worth, but I could, I guess it would be paper net worth, but like I could fire sell my stuff and walk away with 8 figures. I'm not being rosy on my stuff.
yeah. what's your hardest challenge right now? Like what's like stopping you from like the next level, let's say, if we could fix one thing?
Well, if I freed up the liquidity to pay out that investor, I would be financially done. Like I could be done forever. Properties could, do whatever they do. The rents could go down a little bit. I would have more than enough money to do everything I wanted to do, which would be cool. Could buy the house, could buy the sports car, could retire my mom, and
Why are you trying to pay off this investor? Like why? What's the
well, there's a
rush?
timeline. It was what was agreed upon.
Oh,
So that's we bought a deal we shouldn't have bought. The investor renegotiated within a week of closing, and we should have said no. They changed the terms
wow.
that made it. Uh, it was hard to overcome, but my partner and I were excited about doing the deal, which was a mistake. And we bought it anyway. So that's on us. But we signed up for it. We've still got like 18 months to pay it off. I'm trying to pay it off this year. We'll see. But that's why I'm doing all these flips. And once that's gone, back into the realm of there's more money coming in than going out. And it would be hard to flip that. Till then, it's like, it kind of come up with a lot of cash. So we're doing
Yeah.
the bigger value add deals with as much math backing as we can, say we should be able to take these three deals, get this amount of cash, knock it out, and we reset. And we don't have to sell everything we have.
Yeah.
Let's play.
Nice. What's one question you wish more people would ask you?
I have a question that I wish people would ask. Well, I haven't really thought about that, so maybe it's that question. uh, a lot of people make assumptions about everybody's business, and most assumptions are wrong. And
hmm
people assume that, oh, the down payment money or X and Y had to come from friends or it had to come from family. And people don't ask, maybe it's this, is how many times did you fail your initial pitches getting your first deal? Because first deal, like you mentioned earlier, the first million's way harder than the second.
hmm
And so it's how many times did you try this before it actually works? Because first time I went mutual on anything, I bought it. It was my first deal, but the amount of times I had to pitch it, that was a lot. Now I messed up every one of them but one, similar to how banks turned you down on every time except for two
Oh
banks that work,
yeah.
right? The amount
Oh,
of pitch,
dude, you don't even know how many banks we've gone to on some deals. Like one deal, we were trying to buy this 100 unit in Oklahoma City. We went to like 30 banks, I think. It's honestly hilarious at one point. But we just kept going, and we actually not buying it because we are like, no one's telling us yes, probably a sign. Even though it was such a great deal. But yeah.
so yeah, it'd be how many times did you try this before it actually worked?
hmm Yeah,
And
people don't see like the struggle; they just see the success.
yep, and there's a lot of things that happen behind the scenes to make everything work.
Oh yeah, absolutely. This was great, man. We gotta do this more often.
Absolutely. I think we went for a whole hour, so that's cool.
Oh yeah.
Again, let's follow Mr. LLC on Instagram. And if you did it all the way through this, we appreciate you watching and hit subscribe on the channel. Whether you're watching on his channel or mine, you should still hit subscribe. Talk to you later.